In this video, I will answer 4 questions. First question, maximum cash transactions to avoid income tax notice. Second, maximum UPI transactions to avoid income tax notice. Third, maximum FD limit to avoid income tax notice. And fourth, maximum credit card limit to avoid income tax notice. Now you might be thinking, if we are paying income tax on time, why would we get an income tax notice? But it's not like that. There are many types of transactions which the income tax department monitors very closely, and they can send you a notice for it. Now the information in this video has been collected from various different sources. Like there is a document uploaded on the official income tax website, and also we have collected various bits and pieces from different places just for this video. And here's a disclaimer, this video is for educational purpose only. Please consult a qualified CA or legal expert for your case. So first, let's talk about cash transactions. As you know, the Indian government is actively trying to reduce the use of cash for the past 8 to 10 years. That's why cash transactions are being heavily monitored. Now in cash transactions, there are two cases. Cash transactions in a savings account or cash transactions in a current account. First, let's talk about savings account. In savings account, both cash deposit and cash withdrawal, the limit for both is 10 lakhs in a year. That means in one financial year, you can deposit and withdraw up to 10 lakhs in cash from your savings account. Now here's an important point. You can still deposit or withdraw more than 10 lakhs in cash in 1 year from your savings account. But you must have a proper proof for it. If you don't have valid proof, you will receive a notice from income tax and may also face a penalty. And how much is the penalty? I will explain that in a moment. Now let's say you have proper proof. Your transactions are genuine, and for some reason you have to do cash transactions and withdrawals. In such cases, the government will deduct TDS, tax deducted at source, separately. Now how much TDS will be charged depends on how regularly you file your ITR, income tax return. Let's understand this clearly. Assume that you file your ITR on time, and in 1 year you withdraw 1 crore 20 lakhs in cash from your account. In this case, TDS will be charged at 2% on the amount above 1 crore, which means on 20 lakhs, since 1 crore 20 lakhs minus 1 crore, that is 20 lakhs, 2% TDS, which will be 40,000. Now if you don't file your ITR on time, the TDS will be much higher. For example, if you withdraw 1 crore 10 lakhs in a year, then for the 80 lakhs between 20 lakhs and 1 crore, you will be charged 2% TDS, that is 1.6 lakhs. And for the amount above 1 crore, which is 10 lakhs in this case, you will be charged 5% TDS, which is 50,000. So total TDS equal to 1.6 lakhs plus 50,000, 2.1 lakh. But if you have filed ITR on time, you would have only paid 20,000 as TDS. Now let's assume you are thinking, I don't do cash transactions above 10 lakhs. So why worry? Let's just stay under the 10 lakhs limit and avoid all stress. But sadly, even with this 10 lakhs limit, the government has placed several restrictions. Let's talk about those restrictions. The first restriction is any single cash transaction cannot be more than 2 lakhs. If it is more than 2 lakhs, you will have to provide proof. And if it is a real estate transaction, then you cannot pay more than 20,000 in cash. We all know how much black money runs in the real estate deals. It's very rare that people register property at the actual price. Usually people register at 50% to 60% of the real price just to avoid paying full tax. That's why government has placed this 20,000 limit on cash in real estate. Now all of this was about savings accounts. But what if you run a business and use a current account? Let's talk about that too. Now if you have a current account, then in that you can do a maximum of 50 lakhs cash transactions in 1 year. This includes both cash deposit and cash withdrawal. In comparison, for savings account, the limit was only 10 lakhs. Now since it is a business, you may have to deal with cash transactions daily. But even for that, the government has set limits. As per the government rule, if you do a cash transaction of more than 10,000 50,000 in a single day, then you cannot claim that expense in your taxable income. This means if you can't deduct that expense from your taxable income, your profit will look higher on paper and you will have to pay more tax. Now let me remind you of one important thing. All these limits are only for cash transactions. There are no such limits or restrictions on non-cash transactions. So even if your savings account has 2 crore, 5 crore or 10 crores, the government doesn't care. So as you can see, there are many limits on cash transactions. After cash, now let's talk about UPI transactions, which are being used a lot these days. So what are the restrictions in that? Let's look into it. If your total UPI transactions in a year are less than 50,000, then you don't need to worry at all. Income tax department will not send you any notice and you don't have to take any stress. But just remember one thing, this 50,000 limit includes both debit and credit transactions. Now there is one type of transaction that doesn't get counted in this 50,000 limit. If someone borrowed money from you and they are returning it to you through UPI, then this kind of repayment transaction will not be counted in 50,000 limit. But there is a very high chance that your UPI transactions in a year will cross 50,000. So what to do in that case? I mean, even I have more than 50,000 UPI transactions in a year. Now let's talk about that. Even in this case, there is nothing to panic about that. Let's say your UPI transactions cross 50,000 in a year. Maybe you made a payment to a vendor or to a shopkeeper. Still, you don't need to stress. For example, assume you did 2 lakhs worth of UPI transactions in a year. In this case, the income tax department will match your UPI transactions with your ITR, income tax return. If your ITR shows an income of more than 2 lakhs, then there is nothing to worry about that. But if your declared income is less than the amount of your UPI transactions, then the income tax department might start doubting and your chances of getting a notice increases. Even if you get a notice but you are able to prove the genuineness of your transactions, then again no need to stress. Now there are many people who do huge UPI transactions just to earn cashbacks and rewards. These UPI transactions often go into thousands or even lakhs of rupees. This method is very popular among students. In fact, many students have turned into their side income. But the moment income is involved, you must understand that income tax also applies. Now in this case, life can become quite tough. Let me explain how. If you have earned more than 50,000 in a year through cashbacks and rewards, you will have to pay income tax on that amount. Your UPI transactions will be treated just like income from mutual funds or fixed deposits. Let me explain what that means. Just like the interest you earn on FD is considered as income, especially it is shown under income from other sources when calculating your tax. In the same way, rewards and cashback earned through UPI transactions will also be treated as income from other sources and taxed accordingly. And not just UPI transactions, even your e-wallet transactions are taxed in the same way. According to section 56(2) on the Income Tax Act, the cashback and rewards you earn will also be taxable if they cross 50,000 in a year. That means if in 1 year you earn more than 50,000 through rewards or cashback, you will have to pay tax on it. But your problem doesn't end here. If you are earning more cashback and rewards, that means your transaction volume through UPI is also likely to be very high. If your total UPI transactions crosses 20 lakhs in a year, then you will also have to pay GST. In India, if transactions in any account go about 20 lakhs in a year, then it's a mandatory to register for GST and also file GST on time. To put it simply, the GST department assumes that if your UPI transactions are more than 20 lakhs, then all those transactions are part of your business turnover. They consider it as business income and based on that you will have to pay GST. But in reality, you are just doing these transactions to earn 1 to 2% cashback and rewards, and because of that you can get into serious trouble. So in short, if you are doing heavy UPI transactions just for small rewards, please be very careful. Otherwise you might get stuck badly in income tax and GST rules. Now yes, some people might be genuine cases too, like small business owners whose UPI transactions go into lakhs of rupees. What about them? So in such cases, my advice would be shift all your transactions from savings account to current account. Why? Because in a savings account, if you do cash transactions about 10,000 per day, you will come under the income tax radar. But in a current account, there is no such restrictions. In a current account, you can do as many transactions as needed. Just make sure that your transaction match match with your ITR returns, income tax return. By doing this, the chances of receiving an income tax notice becomes very low. Now let's talk about FDs, fixed deposits. In this case, if your total fixed deposits across banks in 1 year go about 10 lakhs, then the banks will report it to the income tax department. This information comes directly from the income tax website. But even here, as long as your savings match your income minus your expense, the chances of receiving an income tax notice are very low. And even if a notice comes and if you are able to justify and explain it properly, then there is no need to panic. The simple meaning is your savings or fixed deposits should match the amount you are left with after your income minus your expense. Now let's talk about credit cards. The rule is almost the same here too. If you spend more than 10 lakhs in a year using your credit card, then your account will get flagged by the income tax department and you might receive a notice from them. But in case of credit cards, the story starts from here. If your credit card entries are above 10 lakhs, then the income tax department will do one thing. They will first check your income details from Form 26AS and then match your income with your credit card expenses. Now just with credit card expenses, they will also match your income with all your other expenses. Now here there can be 2 or 3 different cases. Case number 1, your income is much lesser than your expenses. Let's say your income in a year is 6 to 7 lakhs, but your total expenses are 25 lakhs. In such a situation, things can go seriously wrong. It's almost confirmed that you will get a notice from the income tax department. Now you might be thinking there are 7 to 8 crore people who file ITRs every year. How can the department can check every person's file? In this case, you must remember 2 important points. First, the department now uses smart software tools that can highlight mismatched cases in just 5 minutes. So maybe human officer can miss your file, but missing it through software is almost impossible. Second, even if by chance the software also misses your file can still pick it up anytime in the next 7 years. And the fine for this, the penalty can be as high as 50 to 60% of your total income. So the question is, how long do you think you can escape? If you are in such a situation, my honest advice is immediately consult a good chartered accountant, CA. Now case 2, let's say your income is much higher than your expenses. For example, your income is 50 lakhs in a year and your total expenses are 20 lakhs, out of which 10 lakhs were through credit card. In this case, the income tax department may still send you an inquiry. You don't have to worry too much. You will simply need to submit the details of your expenses and the department will check if your expenses were genuine or not. Now case 3, you have no official income, but you are still doing transactions using credit cards by rotating money. Like you are using one credit card to pay the bill of another, or doing bulk transactions just for cashback and rewards. Usually, like I mentioned earlier, this kind of activity is common among students. So if you fall into this category, then your financial life might become very complicated, and it is strongly advised that you immediately find a very good lawyer, because here you are not just dealing with the income tax department, but also the GST notices can come your way and you could get into serious legal trouble. So in this video, we have covered all types of transactions, whether it is an UPI transaction, cash transaction, FD limits or credit card limits. Everything has been explained in detail. We have tried our best to deliver maximum and accurate information to you. If you found this information useful, please leave a nice comment. That will make all our effort feel worth it. And don't forget to share this video with your family and friends. Until then, take care. This is Bala signing off.